Hi all, and welcome to this presentation with the Maha Energy. My name is Stian Vibstad, and I'm an equity analyst at ABG. And allow me to introduce Victoria Berg, Investor Relations Manager with Maha Energy, who will be presenting the company to us. So Victoria, please go ahead.
Hi everyone, and welcome to the presentation of Maha Energy. As Stian mentioned, I'm the Investor Relations, Victoria Berg, and this is the first time I'm presenting the company. So I know that a lot of you are tired about talking about the pandemic at this point, but that's actually the reason why I'm here for the first time today. I had only been at Maha for about 6 months when the pandemic started and only had one chance for a physical meeting to meet a few of our shareholders before we entered this digital world. So I know I'm talking to you for a camera today as well, but I'm very happy to be here. And I can also say that today I cannot only see the light in the tunnel, I can actually feel the light hitting us. And as a company, we feel very strong and very excited about the future ahead of us. So yeah, I'm really glad to be here today. And today I will go through a bit more of who we are, what we do, and our assets. And if you have any questions in the end of the presentation, please don't hesitate to reach out to me. Next slide, please. So the disclaimer, more or less that these are forward-looking statements and are subject to change. Next slide, please. So we are an oil and gas company. We are not an exploration company, but an exploitation company. We look for fields with already existing and discovered oil, assets that may be underperforming, where we can use our expertise and knowledge for oil recovery. We are a value-driven company where we not only look for quantity, but also quality, as in dollar value per barrel. One of the company's strategies is our three-legged stool, which means that we want to spread risks, both geographical, political, and economical, and operate within at least 3 different jurisdictions. So at the end of 2020, we accomplished that by adding Block 70 in Oman. We are also a very conservative company, so another strategy for us is to spread our asset base. So 50% is stable production base, which is very low risk, reliable production, and predictable cash flow. 40% is developing assets through turning resources into reserves, and 10% is near field exploration. So this may be deeper reservoirs or just near field exploration. Next slide, please. A little bit more about who we are. We were founded as a private company in 2013, first listed in 2016 at Nasdaq First North in Stockholm, and then uplisted to Nasdaq Main Market by the end of 2020. So we're currently listed at the Nasdaq Stockholm in the small mid-cap category. We have a market cap of roughly 1.7 billion Swedish kroners, and our 2021 revenue landed at 68 million USD. We have about 80 employees today, and we have 5 producing assets in 3 different countries. We have 2 assets in the United States, LAK Ranch and Illinois Basin. We have in Brazil, we have Tartaruga and T Field, and in Oman, we have Block 70 Mafrik Oil Field. We have a 2P reserves by the end of last year at about 37 million barrels, and certified resources in Oman of roughly 33 million barrels. Next slide, please. So here you can see our key metrics. The company have always had strong finance metrics. You can see here on the left-hand side how we have increased our production throughout the last years. We have quadrupled our production from about 1,000 barrels a day back in 2017 until about 4,300 barrels a day at the beginning of 2022. And we aim to go down that path again by quadrupling our production once again. We have been profitable for 18 quarters in a row if you exclude the write-down of LAK at the end of 2020, which was a result of the low oil prices seen during that year. And you can also see our netbacks, and that's what is left of the operations costs and royalties have been paid. So as you can see here, we have a very healthy netback that is reinvested into our operations. So by the end of 2021, the royalties in Brazil were reduced from 10% to 7.5% for both our fields. And the new royalties will remain at this level as long as the company is seen as a mid-sized company, which means not producing more than 10,000 BOE per day on a global basis. So with these royalties, the Brazilian fiscal terms are among the best in the world. So with current oil prices, the company has a very healthy cash flow. Next slide, please. So nevertheless, as an oil and gas company today, we are obliged to make our best effort in doing whatever we can to decrease the operational impact we have on our planet. In 2020, the company started its ESG initiatives, and in April 2021, we released our first sustainability report for 2020. So you can dive deeper into this and details about what actions the company are making in the report that is up on our website. But you can see some of the examples here. For example, we recycle and re-inject all our water except on Tartaruga, where this is not possible due to reservoir pressures. So at Tartaruga, all our water is trucked to a licensed and environmentally certified disposal plant in Bahia. All our gas is being handled, and we have tight flaring restrictions. So in Brazil, we convert and sell most, around 85% of our gas into electricity and CNG, compressed natural gas, to local ceramics factories. And next slide, please. So our assets, the T field is our cash cow really, and it's an onshore asset, which is, as is all of our assets per today. This field was acquired back in 2017, and it's located in Bahia, near Salvador in Brazil. So this is the company's engine today really. We have 6 producing wells here today and are planning to drill another 2 new wells for 2022. We recently drilled and completed our 6th production well, T4, which is now in production. The well tested 4,695 BOEPD, which was a record volume for a single well on the T field. It was also a record well for Maha and ranks as the 3rd best ever well on onshore Brazil. So this is of course very exciting results for the company and our shareholders. And this well, together with the new well T5 that is just now being drilled, gives us that extra capacity to maintain a balanced and strong production at the field. So with this, we should reach our plateau at the field to around 5,000 BOEPD. And next slide, please. Tartaruga. This is located just north of the T field, We have 75% working interest here, and Petrobras has the remaining 25%. So this is a completely different basin than at the T field. We have had some problems figuring out the geological reasons and difficulties on the north side of the field. So we are now focusing even more on the south, the more productive side of the field, where we today have 2 wells in production, and we aim to start another 1 well this year. Next slide, please. So Mafrik Oil Field. This field is located in Oman. We won the bidding of operating Block 70 Mafrik in Oman at the end of 2020. So Mafrik is a heavy oil field that was first discovered in 1988. And this is a very shallow field at only around 500 meters. So this makes development costs here very low. And the field has already shown significant amount of oil. So this is a classic example of us as a company, which is not exploration, but developing already existing oil fields. So the field have already since earlier 4 wells, and the plan for us is to start test production during 2022 and drill another 6 to 8 wells before the end of 2023. Next slide, please. So Illinois Basin. The asset is located just across Illinois and Indiana in the United States. And the acquisition of Illinois Basin was made in the middle of the pandemic and represents our agility to move quickly. And we had a strong cash balance at the time, and this was a distressed asset with very low risk. So we're always keeping our eyes open to different kind of openings and opportunities. And this was just like that. We gave a very low price for a very stable and healthy asset. So this is very low risk asset for stable production. And these wells are though at a higher operation cost than, for example, the Brazil assets. But at these high oil prices, we are making very good results. So we have 33 wells at different locations in the basin, and we aim to drill around 2 wells in 2022. We started drilling 1 well, Glaze 11-5, on March 1st, and the well takes about 4 to 6 weeks to complete. Next slide, please. So LAK Ranch is located in Wyoming in the United States. This field has been a challenging asset for the company, and due to very low oil prices during the pandemic, we decided to shut down the field, and it has remained shut in since then. Today, when the oil prices are back up again at higher levels, we are evaluating how we can and if we should proceed with the field going forward. Next slide, please. So some company highlights over the last 2 years. I mentioned most of this already, but we are listed on Nasdaq Stockholm main market. We are a refinance company for growth with BTG since March 21. We continue year-on-year growth with record net results in 2021. We added Oman Block 70 and discovered Mafrik Heavy Oil Field. We have our 3-legged stool strategy completed and 10-40-50 asset pyramid shaping up nicely. So in the States, we acquired Illinois Basin during the pandemic. We have increased production from 160 to 500 BOPD since acquisition. In Brazil, T4 tested 4695 BOEPD, and royalties have been reduced from 10 to 7.5%. In Oman, we were successful in the bidding of Block 70, and we aim to start long-term production very soon. And if you go to the next slide. Next slide. We can, as I mentioned before, if you have any questions, please don't hesitate to reach out to me, and I'll be happy to be as helpful as possible. Thank you.
Thank you for the presentation. We have some minutes left for a short Q&A, so I'll kick it off. First question goes to your 2022 production guidance. As you said, the Thai 4 well performance has been very positive. And if we were to assume that this level continues, what is your thoughts around the current guidance range?
It's too early at this point for an eventual guidance revision, but we do have confidence for a strong production during 2022. And we also aim for a plateau at the T field of about 5,000 BO EPD. So as I mentioned before, with T4 and T5, we should have that extra capacity to remain on plateau during 2022 and beyond. For example, in case some other wells needs to be shut in for maintenance, we should be able to maintain plateau volumes. So it's too early at this point.
Yeah, makes sense. And you also talked a little bit about your Oman block. Can you maybe elaborate a little bit on how your Oman operations are progressing and the status on the potential farm down?
Yes, so we're taking more and more steps into getting equipment to place and starting the planned test production. In terms of production, we do need to see where we will end up with the potential farm down. We are still in negotiation with a potential partner in regards to that.
Can we expect to see some news related to Oman maybe in first half this year, or is it too soon?
It's hard for me to answer that question today, but I mean we are in negotiation with a potential partner. So as soon as we have anything, we'll let you know.
And you have of course done some M&A in the past, and given the recent high, of course, oil and gas prices, are you looking at any other inorganic growth opportunities?
Well, we're always on the lookout for new opportunities, and as long as we see and believe we can add value, we're interested.
And are you also interested to expand your operations beyond your current geographical presence, or mostly within the same areas?
Well, it's the same there really, except that we're just getting settled with the new Block 70 in Oman. So we're gonna try to focus on our current assets, but it's the same really, that we always have our eyes open for new opportunities.
Yeah, I have a couple more. You've also talked about cost inflation recently, like of course many other companies. Can you elaborate a little bit on which parts of the operations that are most exposed to this, and to what extent you're seeing it?
Well, it's like all sectors. We're struggling with delivery times, costs of shipping, and lack of raw material. So this affects all our operated assets. For example, in Brazil, we are waiting on a premium gas tight tubing for our gas injection well.
And are you seeing any improvements on the horizons, or is it difficult to specify?
Well, I mean, of course, it's been a bit more. It's been more. How do you say? The delays have been more during the pandemic, of course. But of course, we do see that it's getting better, but it's still consequences.
Makes sense. And also, with regards to your 5-year plan, is there anything new to add here? I'm thinking about impacts from potential changing production profiles, recent high oil prices, Thai for well performance, and so on.
Yes, of course. As you mentioned, there's a few updates that needs to be done. The 5-year plan we have up on our website is something that we're working on to update at this moment. So we should have a updated version out in soon future.
Great. Yes, I don't think you've answered most of my questions and then some. So thanks a lot for that. Do you have any final remarks?
No, I think I'm happy. Thank you.
Then thank you very much for this presentation and the Q&A. And thank you to all who listen in, and have a good day.
Thank you.